Welcome to BizTech Property Show. I'm Sharon Chung, and today I am speaking to Michael Kong, President of the Association of Valuers, Property Managers, Estate Agents, and Property Consultants in the private sector. The outbreak of the COVID-19 pandemic has, in the first quarter of 2020, has actually affected numerous sectors from aviation and tourism to oil and gas. All real estate markets have been affected badly in Asia, and also Malaysia is not an exception. Welcome to the show, Michael.
Thank you very much, Sharon.
Michael, can you share with us the overview of the property market pre-COVID, and now how has the pandemic affected our property market also?
Well, I think as everyone knows, COVID has badly affected the real estate sector. So in terms of statistics, let's look at the first half of 2019 as compared to the first half of 2020. That's when the pandemic happened, and we have a total lockdown from March to sometime in June. Okay, so looking at the numbers, first half of 2019, the total transaction was 160,165, and correspondingly, first half of 2020 has dropped to 115,476, which is a drop of almost 28%. Mm-hmm. Now, that is the volume. That means the number of transactions has fallen that much. In terms of value, the same period, first half 2019 and first half 2020, the value has dropped about 31.5%. From a high of 68.5 billion to 46.9 billion. So you can see that the pandemic or COVID has really impacted the local real estate market.
Okay, so what are the reasons for the decline? I mean,
well, basically,
last year it was also low, I would presume, right?
Sorry, again?
Last year, I mean, the numbers, the property market was not doing that well also.
Well, no, in fact, it was on a rise. If you compare to, if you move backwards, that means you go back to 2018. If you compare to the numbers in 2018, 2018, we have 149,862 transactions in the first half of 2018. So it actually went up. That means it was on a gradual rise. Then the pandemic hit and we kind of slide down. So you can see that we were on a recovery. But then unfortunately, we have this COVID.
So what changes actually, what can we do or, to boost the property market now?
Well, it has to be a concerted effort, from the government, the industry players, developers. It has to be a well thought out strategic, formulation of policies to be able to attract investments to come in. Because just based on our local consumption, it's rather challenging to mop up the supply because we are already in an oversupply situation.
Yes, a lot of overhang units, right?
Yeah, yeah.
So how to solve that problem first?
You see, the major oversupply, lies in office, stratified properties, that means service apartments and condominiums. So we have to be able to attract foreigners to come in. So we have to relax our foreign investment policies, and we have to be investor friendly, business friendly. We must be able to attract FDIs to come in, and then the FDIs will bring along, purchases for our real estate.
So do you see foreign investors coming in? I mean, the government has actually decreased the threshold of from.
Yes, but then decreasing the threshold is not the best or the only way to attract investors. You have to be able to give them the kind of comfort, for them to come in. It has to tie in with other business aspects. You know, the way the way we do business. You know, it must be friendly to foreign parties. You know, in terms of taxes. You know, in terms of financing and etc. etc. So it has to be a holistic approach rather than just one or two aspects of this real estate market. You know.
So for Michael, for a local investor, okay, I mean, is this a good time to purchase properties? And which
well, I believe any time is a
actually?
good time. You know, any time is a good time to buy a property. But obviously, you know, with COVID, prices has gone down tremendously for all the sectors. You know, residential, commercial, industrial, etc. Now, I think the key point is you must be able to find the correct suit. Okay, meaning to say, yes, no doubt, in general, the prices has gone down, but you have to do your own study to find which is the best fit for your investment, what do you call, strategy, you know, because it depends on each individual's risk appetite, their profile, you know, their investment horizon, and their purpose of investment. The answer differs according to each buyer's objectives, their expectations, and their purpose of investment.
So, which property sector do you think is more viable? Commercial, residential, which will give you a better return of investment?
Well, again,
especially
like I stressed,
during this time.
Yeah, again, like I stressed, you know, it depends on your own risk profile. If your risk appetite is not so high, normally, you know, you would go for residential because that's where the most demand is. So the risk is mitigated. But if your risk appetite is a bit higher, then you go for commercial or industrial, where generally the returns are higher. So it really depends on each individual investors or purchasers' objectives, you know.
I see. Okay, Michael, just say if a purchaser wants to buy a house, for example, right? Should they go for a sub-sale or to purchase directly from the developers? Because now, I mean, many developers are actually giving out a lot of rebates. They have free stamp duty and legal fees for SMPs and even loan agreements, right? So what's your opinion on this?
Okay, now, assuming the location is the same and all other factors is constant, okay? That means you're just looking at one is from the developer and one from the sub-sale. Then it's very simple. You just have to calculate, you know, all the, you just need to do a simple calculation, meaning to say, you need to calculate your savings from stamp duty because the developers, under this HOC, you are able to get a stamp duty waiver, all right? Then the developer pays for your legal fees, your stamping, your MOT, etc., etc. You know, so if everything is the same, you know, you just have to calculate the savings, the total savings. At the end of the day, what is the net purchase price from the developer compared to the sub-sale price? If it's more or less the same, I would advise you to go for developer unit. Why? Because first of all, you have a defect liability period. You know, you still enjoy the defect liability period. It's a newer unit, all right? You have less, you know, renovation, refurbishment to do, all right? So if all else is the same, I would advise you to go for primary market.
Like Michael, you're a valuer. So how would you value this type of properties where rebates are given?
Okay, now this is a tricky thing because it's been, I mean, this practice of giving up discounts, rebates is quite prevalent now. So we have to do a lot more study to find out the actual selling price, and we can't just take it from the S&P because the S&P is not the exact price that you're paying. After you minus out, you'll be paying like, you know, maybe 10 or 20% lesser. So it's getting more difficult for valuers. It means we have to do extra work. We have to do more intensive or extensive market research in order to arrive at the true market value of the property.
So what about banks? How would they give out this type of loans?
Okay, similarly, the banks, the banks are also very cautious. They know this practice is prevalent. Okay, so they would normally check with valuers. They would check with valuers, to find out what is the true market value of this property. Okay, and depending on the buyer's creditworthiness, their repayment capacity, that means the banks will not just take the sales and purchase value, sales and purchase price wholesale. Okay, they look at it because that's a legal document. S&P is a legal document. Okay, but they may not just take it off and say that, okay, I'm just going to give 90% of the sale and purchase price. No, they're going to do. They are more careful. They will, depending on each buyer's creditworthiness, they will give the margin accordingly. That means they will not take the S&P price wholesale.
So what is the ratio like now, like for a loan to value ratio? So what kind of a loan percentage would the banks give? Like would they generally more like 90% or 70%?
This is quite individual because it depends on the borrower's capacity. So depending on the borrower's capacity, the third house ruling is already out. That means there's no 70% for the third house. So it depends on the buyer and the borrower. If they are able to repay, they have the repayment capacity, I'm sure the banks are willing to lend up to 80%, 90%. That's not a question of how much the margin is given.
So generally on a general scenario, so the banks would actually base it on the valuation of the property.
Yes.
Right. So not so much on the developer's entry price.
Correct.
See. Okay. Michael, according to a research, there was also mentioned that there is as many as 81% of Malaysians who want to buy a house by the end of 2021. So this can be regarded as a good sign that the market is actually recovering faster than what some might be, seem to be in, even with now with the COVID vaccine coming out. So how do you see the property market? Will investors' sentiments actually improve?
Well, I suppose moving forward, because we are getting a lot of good news about the vaccine, hopefully by first half of next year, we may see some recovery, on the health front. And I believe, and I truthfully hope that the market would recover, quickly. And I believe there's a pent-up demand because everyone was being suppressed during 2020. They're not able to move. They're not able to do anything. There's kind of like a pent-up demand. And if you look at historically, after every crisis, whether it's the Asian financial crisis or what have you, the rebound was quite rapid. So hopefully this round, with the vaccine being found and the population being vaccinated, I hope we can see a quick recovery of the market.
Don't you think that property prices are relatively too high? Especially for first-time buyers also. I read somewhere that Kuala Lumpur is the highest state where the property market, property prices are actually, compared to other states, it's the highest. So what is your opinion on that?
Well, there's always this disparity between the income and the price of property. Depending on the product, I think you have to look at the product, you have to look at the location. There are a lot of affordable housing as well, it's just that what are the preferences? If you prefer to have a central location with all the amenities and facilities, obviously the price will be higher. So it's a different segments of the market. Okay, there are segments which are affordable. There are segments which is on the high side, which is the so-called the higher bracket.
So, what is your opinion? Okay, how can we improve our local property sector during this time?
How do we improve? Well, like I said earlier, it has to be a concerted effort between the government. The government has to understand what are the issues in the real estate market. What problems.
Michael, do they understand? Does the government understand what is the issues we are facing?
Well, I should think
something so. Also to actually to support this.
Well, recently, RISM, the Royal Institution of Surveyors, has come up with quite a good research into our housing market. Okay, our housing market and the problems with our housing market, and they have also come up with some kind of proposal recommendations, which I think is quite good. The key point is, whilst the property overhang situation is quite severe, okay, the research found that actually if I could just quote this researcher.
Yes.
Well, they have actually done research mainly on Selangor and Johor, where the overhang supply is more serious. Now, they have found that out of the 141 projects with overhang units, okay, only 11, okay, okay, in Selangor, out of the 97 projects, only 11 projects has not met the break-even point. That means 77 projects actually have made profit.
Okay.
And similarly in Johor, out of the 170 projects that has overhang units, only 15 projects has not broken even. So you see, I think the government has to understand that whilst we have this overhang situation, it's not really that critical because the developers have actually broken even. They are not losing money. So that is something which is quite, to me, is important to understand.
Okay, Michael, lastly, can you give us what is your take on the Malaysian property market outlook for 2021?
I'm quite optimistic, I'm quite optimistic. But having said that, I think, again, I have to stress that all the industry players, whether it's developer, whether it's a bank, whether it's the consultants and the government, we have to sit down to, really formulate strategic policies going forward, because we are losing out in terms of regional competitiveness. If we compare to Thailand, if we compare to Singapore, if we compare to Indonesia, we are losing out. We are not able to attract people to come in. We are not able to attract buyers to come in. We are just within ourselves, and then, we don't have so much resources. So we have to open up our market. We have to encourage foreigners to come in, set up factories, set up offices, set up their headquarters and things like. Only then our market will be vibrant. Here we are just, within our own selves, we don't have the capacity.
But why isn't the government doing enough? I mean, don't they see that things like...
You have to direct that to the government. But I'm pretty optimistic. I think next year we should see some rapid recovery.
When next year? Second half?
Yeah, I suppose so.
I see. Okay, thank you so much, Michael,
All right.
on the show. I'm
Thank you.
speaking to Michael Kong, President of the Association of Valuers, Property Managers, Estate Agents, and Property Consultants in the Private Sector. For more business and technology conversations, check us out at www.biztech.asia.